Okay, I think we can start. Thank you everyone for joining us today. I'm Maria Fernandez Viral. I lead CGAP's work on data, where we look at the role that data plays in advancing financial inclusion. Our work on data in the last couple of years has focused on three areas. First, improving our understanding on the availability of data for low-income people and the opportunities it can create. And we'll have a publication on that topic coming out soon. Second, on cultivating and showcasing examples from around the world on how providers use data to benefit low-income customers. And finally, on identifying the main components of an inclusive data ecosystem that helps unleash data's potential while mitigating risks. So data protection is one of the key components of that safe data sharing ecosystem, and that's the topic of our recently published paper and of the focus for today's webinar. So thank you for joining. A few logistics details before we start. The webinar is being recorded for those that are unable to join live. The recording and the presentation will be available on CGAP's website, and we'll send a link to those who sign up. You can raise your hand or use the chat function for questions. We'll hold live questions until the Q&A session at the end, but feel free to put your questions on the chat as we go along. And the microphones are muted by default, so if you raise your hand, you'll be unmuted to speak during the Q&A session. So our speakers today are Ariadne Plaitakis and David Medin. Ariadne is a former CGAP consultant and currently a senior program officer at the Gates Foundation. She has over 20 years experience in digital finance and payments regulation, open banking, financial inclusion, and related topics. And her most recent work for CGAP looked at open banking, payment interoperability, competition in digital financial services. And David is a CGAP consultant and former CGAP staff lead on data protection and cybersecurity. He has more than 25 years of experience with privacy and consumer financial services. Before joining CGAP, he served as the chairman of the U.S. Privacy and Civil Liberties Oversight Board, an attorney fellow for the Securities and Exchange Commission, and a special counsel at the Consumer Financial Protection Bureau. So now I'll pass it on to Ariadne to start the presentation. Thank you.
Apologies, I just need to unmute myself. Well, thank you everyone for joining. I'm very excited to present our work, David and I work. And let me give a little bit of background to basically open finance and open banking before we delve into the research that we've just published. So if we get to the next slide, please. So we've said at CGAP always that open banking is just the beginning of a journey, and it's what we think is a journey towards open data. So open banking, at least for CGAP, is really the idea of exchanging consumer data between banks and other financial service providers on the basis of customer consent. And this could be with other financial service parties or fintechs or third-party TPPs. And that was what we would say is open banking, and it's sort of focalized on the banking sector. When we get to open finance, basically we're expanding the scope of the data exchange. So we're now moving from banking products to other financial services, such as insurance, investments, and pensions. So we're going beyond payments and banking. And then ultimately, this journey leads us to open data, which is basically the exchange of consumer data between private sector institutions, including financial institutions and non-bank financial institutions, such as mobile money issuers, and then even other institutions that are outside the financial sector, such as utility providers, telecom providers, social media providers. And this again would be a type of sharing based on consumer consent. Just to be clear, because people often talk about open APIs and equivalent that to open banking or open finance, for us at least, open APIs is a technology. These are proprietary APIs that a financial service provider makes widely available to other companies to consume, allowing these other companies to plug seamlessly into that financial service provider system. So that is a unilateral decision taken by an FSP and is not really the equivalent of open banking or open finance, because there's really no legal or regulatory framework that determines how the data is exchanged. So that's just a clarification. Next slide, please. So as we were saying, we're not just looking at open finance, but we're looking at the link to financial inclusion. There was a previous paper that Stefan Saxon and I published in 2020 that looked at this connection. And I want to just take you really quickly through our research in this regard. So there are a lot of benefits for financial inclusion in connection with open finance. So open finance promotes competition, it develops innovative financial products and services. But we believe that if it's properly designed, it can also empower the low-income population. This is by creating products that have improved value for low-income people who are either banked and underserved. And these are things like savings, credit, financial management products. At the same time, it allows new types of entry into the financial services sector. And these are new types of open banking entities, such as account information service providers or payment initiation service providers. And by allowing these new types of providers to enter the market, we get to increase competition. This should lead to lower prices and an increased diversity of products. And we hope that this will render financial services more affordable to low-income populations. Now, beyond the theory, what we did do in this paper is we looked at the pain points of customers in low-income countries and to see whether any of the open finance products or use cases that exist could actually solve some of these customer pain points. And that's what you see on the right side of the slide. These are some customer pain points that we identified. And then to the right, different types of open banking or open finance use cases that can correspond and alleviate that pain point. Just to give you some idea of how this works, one point that we know of is volatile and irregular income of low-income individuals. And open banking can enable products that can create a financial cushion for these people to smooth out income. For example, they can propose saving trackers or automatic savings sweepers that can calculate what a consumer can save based on the payment history in its payment or bank account. And when it's financial history allows it to, it can actually sweep some of the money into a savings account like automatically as a type of nudge behavior. Another type of pain point that low-income customers have is no access or inappropriate access to credit. And this can actually, the access can either increase access or try to facilitate access that's more appropriate to the use of alternative data that we can, and this alternative data, especially financial data, is something that can be exchanged through an open banking and open finance network, right? And lastly, low-income people in emerging markets often lack control of their budget and over their funds. And this can be countered, for example, with budgeting application that allows customers both to understand, their payment history, their budgets in real time, and actually to react to that in real time. And if you actually, for example, coupled the information that you would get in an open banking app with the ability to do payment initiation, which is basically the ability to allow money transfers between accounts, you can actually create a seamless experience where not only does the consumer have information, it can very quickly react to this information in real time so that it can quickly, do first, as I mentioned, the savings function, or it could also allow consumers to enter into suitable loan directly from the application that started the entire process. But if financial inclusion or open finance is to support certain pro-use cases, like I just mentioned, we need to design open finance in a framework in a certain way. And just in that paper that I mentioned, before I get onto this new slide, we actually had identified 12 different design components of open finance regimes. And of these, 5 of them are elements that we think that if you take particular position on them, you can ensure that poor use cases are supported. And that's what we call financial inclusion by design. That is in a paper, and I believe there will be a link to it at the end of the presentation. So now let me get to the subject matter at hand, which is basically the relationship between open finance and data protection. So a data protection framework is critical to the adoption of open finance, particularly for low income and excluded people in emerging markets, because it promotes customer trust and it responds to the customer's preferences for privacy. For example, a recent CGAP research has shown that poor customers can care deeply about privacy of their financial information and are willing to pay a premium for financial products that protect this data. And you can actually see that in the graph that you'll see on the right side of the slides. And these are some results from our research in Kenya. If this trust and if this framework is absent, then you have a very negative situation. It basically results in all the rules relating to data either being regulated by a private contract, in which case, most often than not, the consumer is going to be the much weaker party in that contract. Or if it's left completely unregulated, it can expose consumers to risks of abuse, fraud, and exploitation, and it will then result in a loss of trust that's going to not just affect, this particular open finance framing, but may even affect other types of financial services, including the whole banking industry. Next. David.
Okay, thanks, Maria and Ariadne, and welcome to everybody. I think there are two aspects of open finance to keep in mind, and then one thing to be concerned about. First is opportunity. As Ariadne was saying, this is a tremendous opportunity, particularly for low-income consumers, to make sure that their data works for them. And it brings in more data than has previously been used in the past in the more formal financial system. It could include cash flow, assets, and other things that would help make people more creditworthy. Secondly is complexity. We're talking about an enormous amounts of data flowing between financial institutions and non-financial institutions for the benefit of consumers. But it's important to keep in mind that this is a new infrastructure that's being created, and we have to make sure it works properly. And third, I want to mention data protection, as Ariadne was saying, is our goal is to dig deeply into the importance of data protection and how to accomplish it, because it's something that's going to be critical to people's trust and confidence in an open finance system. So here, just a beginning effort at complexity is it shows 4 ways we could regulate the interplay between open finance and data protection. One is countries could adopt a comprehensive data protection law that would apply across the economy, including to open finance. The advantage of that, it's a level playing field. Everyone in the economy would have to play by the same rules. The problem is there wouldn't be open finance specific provisions. And as you will see, there are a lot of details relating to open finance that probably require legal attention. Another possibility is an open finance law itself that includes some data protection provisions, and that raises sort of the flip side concerns, which is it addresses the specifics of open finance, but it may not create a level playing field because only open finance entities would be subject to that law. Third, there could be both open finance and data protection laws that would mandate information sharing as well as data protection requirements. But there's a risk that they may be adopted at different times, have inconsistent obligations, even definitions. We've seen that to be the case in Europe in the GDPR and the Payment Systems Directive, using the same words but with different meanings. So there are some interpretive issues and how the laws integrate with each other. And then maybe sort of talking down the road, what Ariadne was mentioning is the ultimate goal could be open data, which allows all kinds of data to flow through the system. And this could be a way, if the open data law has data protection built in, to have a level playing field and take into account the specifics of open finance. Next slide, please. The laws in this area typically have definitions, and even here we see some differences in how open finance defines things and data protection. In open finance, a data subject is normally the person identified by the data, which has a similarity to data protection regimes, but it's more complicated here because in the financial world, we have joint accounts, trust agreements, where there are more than one person on the account, and how do you get consent and participation if multiple people are on the account. We also in open finance have data holders. Those are the people who currently have the data, and they are going to be sending it out to third parties. So you may have a bank sending it out to a fintech. And then thirdly, our data intermediaries and users, there's the ones who receive and use the consumer data, and they could be people who are providing financial advice or payment services as well. But shipping to the data protection world, we have typically data subjects or data principals, as they've been referred to in India, India's proposed legislation. We have data controllers, which under GDPR are the people who make decisions about how data is used, or data fiduciaries, again, in India, and data processors, those who actually massage the data, process it, and crunch the numbers, and under the direction of data controllers. So in this scheme, we have, under open finance, we have data holders and data users who are most likely to map onto being data controllers or fiduciaries in a data protection world. Next slide, please. So I think it's really important to pay attention to the complexity of the data flows that we're talking about. These are really an unprecedented expansion in the use and flow of personal information and an unprecedented degree of complexity. It's more complex because we're moving sensitive consumer financial data to a wide variety of participants who weren't normally parties to the information flow in the financial world, and for multiple purposes, which could be both financial and non-financial. We have people across every income range who are being asked to place their trust and confidence in this new system, but they're understandably concerned about potential unauthorized or fraudulent use of their data, data just going to the wrong entity or the wrong person because it wasn't addressed properly. Data has to be used responsibly in people's interests. People, as Ariadne said, the research Maria and I did in India and Kenya showed people will pay a premium for a financial product that protects their data. So that's an important concern for consumers. And these are concerns that need to be addressed to make open finance work. Research has shown that people will share more data if they believe a firm is acting in their best interests. And with open finance, people are going to be sharing a lot of data. So it's important that they have confidence in how the system operates. Back to Ariadne.
Yes, so thank you, David. So what we did in the paper is we were thinking, obviously a lot of countries will not have data protection regimes, but they would still want to implement open finance. How do we ensure that people are going to be sufficiently protected? And so we spent time trying to identify what are the basic requirements for data protection that you should find in a country regime. So to where, and it can be anywhere, it doesn't have to be in a national data protection law. It could be baked into the open finance regulation that's passed. It could be found in sectoral regulation for financial services regulation sector. So we're just going to present some of these basic concepts. And obviously, our advice to the regulators is you can then underdo a gap analysis, and you could sort of map out these basic protections against what is available in your regime. And that can help you sort of identify if there are any gaps. And it's something that you can think about when you're trying to develop your open finance regulation, is maybe you can address some of those gaps through that regulation rather than trying to implement a separate data protection law or regulation. So here's the first, so let me try to take you some of the basic protections. And here, one of the first part that we're looking at is really consumer control over data. And there are basically two big, here you see there are four concepts, but the ones I'm going to focus on are really notice and consent. Notice is particularly important in open finance, as consumers control starts when a consumer only knows what is being done with their data, right? And because open finance is a novel concept to many, notices that explain which data transfers customers are authorizing will be particularly challenging if they are to serve as a basis for informed consent. The challenge becomes even more complex when a different variety of data types are being shared. For example, data relating to loans, money transfers, remittances, payment cards, and potentially granular choices about which data fields to share with which recipients is even going to make the process even more confusing, right? Because this is going to be questions like, do you want to take your information from your balances? Is it the payment history? Is it just transactions? And then there are also questions about how often, questions about how long the data is going to be shared for. So there's a lot of variables that a consumer not only needs to know about, but must make decisions about in conjunction with their data. So it's really essential to educate potential users about when they are authorizing third-party providers, in particular, to make payments from their accounts, as opposing to just authorizing access of data, which is what people often think about when they're first going down the open finance journey. Then if we look at consent, this is critical because consumers should and often want to control whether and when their data is shared, with whom and for what purposes. Informed consent continues to present numerous challenges, where there's things like consent fatigue, which is due to a consumer's daily interactions and with all the different applications that keep asking for consent. But also, privacy notices are really long, right? And often very legally written, right? In a very complex language. And on top of it, these privacy documents often grant providers very broad uses of data, right? And it's really a take it or leave it choice for the consumer. Yet what distinguishes open finance from other types of data collection is really the need the data holders need to authenticate the customer, right? They have to be ensured that a specific customer is consenting to the sharing of this data, and that the consumer basically is authorizing specific data transfers. They typically want to authorize not just the transfer of all information, but instead have to specify specific things like transfer from a particular account, what type of information needs to be transferred, the transaction time period, whether the transfer is a one-time or a standing request. And what we have to basically capture this detailed consent. And this ultimately may result in the consumer going through several smart screens, such as the ones that you'll see on the slide here, and multiple options where they have to specify, this data, that data, and how this is. So and we believe that this can be very challenging in emerging markets, especially if there is either limited literacy or they don't have smartphones. You can't actually present the consent process in this way. And so we think it's very important to strike the right balance between usability and protection, as it has been very important implications for adoption. Next slide, please. So we're also looking at another area. The first one we're looking about consumer control. Here I'm looking at responsible use of data. So these are a different type of data protection provisions, right? Because open finance and data protection regimes may both permit and in some cases restrict data usage based on considerations other than consent. And so these restrictions of permission are based on the concept that data is to be used responsibly by data holders, users, and the intermediaries. And these are really basic data protection provisions for any open finance regime. So if we're looking on the restricting data usage part, it may be appropriate for a data holder to refuse to transfer data under certain circumstances, even if the consumer has consented to it. This includes situations where the data holder reasonably believes that the transfer could result into some physical or economic harm, for example, fraud, or could adversely impact the security and the integrity of the data holder's information systems. The regulator should be really clearly set out these types of circumstances. Other types of circumstances in where you may have restriction of data includes when the data subject will decide to revoke prior consent, through the concept of data minimization, which is where you agree to collect only what is needed for the service and keep it for only as long as is needed for the service. And that is a principle that providers can basically apply to their data collection practices, and is something that could be put in as a principle in regulation. And also another type of restriction is either relates to cross-border transfers or data localization, where you can either restrict the processing of data within a certain country, or that all the data needs to be stored within a country, which may, for example, limit the use of cloud computing or other types of cloud services that are not being kept in the country where the regulation is formulated. On the flip side, we also have permissive data usage. And while consent is often the main basis for the use and disclosure of personal information, it is frequently not the only basis. And so you can have disclosures that may be permitted or required by law, based on a court order, or by government reporting requirements. The next slide, please.
So one of the most important concerns with open finance is data security, because people's confidence in the system really turns on whether the data that is now moving through the system is handled properly and securely. And this is an area where open finance can be a big step forward and potentially risk being a step backward. The step forward is what the status quo is right now, which is if I want to download information from my financial institution to, say, an app that provides financial advice, I have to do what's called screen scraping, or the app does, where I give my logon credentials, including the ability to engage in transactions, to some app that gives financial advice, and that app then accesses my financial data and gives me advice about how to save, to spend, to borrow. And the risk is obvious, which is we're trusting that app to use it only to download the information and not improperly transact on my account, or it doesn't fall into someone's hands, which allows those transactions. So giving your credentials to third parties in today's world is extraordinarily risky. But in open finance, we would shift to APIs, application program interfaces, which allow the app to contact your financial institution and just download the data without the ability to transact. It's a simple change, but it's a dramatic data security improvement, because all that's flowing through the system in this context would be your account balances, your loan amounts, and things of that sort. The challenge is with open finance, that's on the plus side. On the challenge is how much data is going through. Now we have a lifetime worth of data going through at the push of a button, potentially, and we hope it gets to the right place. We hope it's used for the right purpose. And as Ariadne said, there may be purpose limitations that the law should impose to make sure it's only being used, again, to pay bills, to give you financial advice, and not for nefarious purposes. One challenge is that holders of data who are being asked to transmit it won't necessarily know the identity of recipients. Are they for real? Are they a bot? Are they GPT? Who knows who they are that's getting the data? So systems have to be built to securely accommodate data transfers. They have to ability to authenticate who's asking to get the data through biometric identifiers or other purposes, 2 or more factor authentication. And all these have to be done in ways that are protective of the data, but not so burdensome on the consumers that they get turned off from it. As you saw from the slide, a couple slides back, we're already talking about a very complex set of instructions of between multiple accounts, which types of data over what time period, for what purpose, and for how long. And if we overlay authentication, which is critical, we have to just make sure the system works smoothly and easily for the consumer. There are also some security responses that are standard practices, like encryption of data that's in transit or at rest, and accreditation of the parties, in some cases, who, particularly those that can transact on your account, pay bills on your behalf, to make sure they are who they say they are. But the risk of a data compromise, especially as open finance is being introduced, is huge to whether people will engage with open finance or say it's too risky. So it's important to make sure that appropriate security measures are in place. Next slide, please. There are also a number of other implementations that are important to pay attention to. Some of them seem somewhat technical, but are actually could be quite critical. One example is record keeping, which is important that there be an audit trail so that if there's ever a problem on which data is transferred and to whom, we have a trail from the holder who sends the data as to exactly what requests they received and which data they transmitted through the system. And it's a way to hold both individuals and firms publicly accountable for their data usage and transfer. And also allows for regulators to come in and make sure the system is working properly and as it should. The response time for requests, again, seems somewhat technical, but again, critical to success, which is how long does the financial institution take to respond to my request to transfer data? And that's important because if I'm applying for a mortgage, a loan, even a job, depending on how the data is being used, it's important that it be done promptly. And one of the things that we've seen suggested is that financial institutions may not always be excited about having their customer information leave the building and go to other financial institutions who might compete with them. Of course, part of the goal here is to promote that competition. But it's important that financial institutions don't sit on their hands and take a long time to process data requests so that, excuse me, consumers can get the full benefit of their information. Another concern is the cost to consumers of open finance. How much will be charged, if anything, for having their data transmitted from one financial institution to another? Again, ideally, for the point of view of emerging economies, excuse me, it's important that there be very little or no cost for the transfer of data. Otherwise, it would preclude large sectors of the economy from participating. Liability allocation also is critical. Where things go wrong, and they will, who is liable for the loss? Again, particularly in a low-income country, consumers are least able to bear financial losses, and again, most likely to be deterred from open finance if they have to bear those losses. And so the question is, how can liability be spread in ways that's both fair and equitable, but also creates the right incentives? We've seen in the credit card world, in many cases, that the liability is placed on the card issuer, not the consumer for the most part. And it's a system that works incredibly well because the entity that has the incentives and the ability can then focus on how to reduce their risks. And the same with open finance is sharing liability, make sure that all the players in the system take appropriate measures to protect the data and make sure it's going to the right place. There could be shared liability with consumers if consumers are partly responsible, but having consumers bear the entire burden, I think, is not a way to guarantee success of how the system operates, especially since consumers may only know the entity that they're dealing with, but not downstream users of their data, whereas the person who collects the data, who may be the one who should be the most responsible, knows how the data is going to flow through the system. And finally, dispute resolution mechanisms. Again, there'll be disputes about which data, for how long was it kept securely, and it's important that there be systems for either informal systems through the entities that the consumer is dealing with, or more formal systems involving mediation or even potentially litigation to resolve disputes that may arise. Next slide, please. So what are some of the benefits and risks of disadvantages of open finance? I think what we're looking for in the ideal world is better tailored financial products or services. With this greatly increased amount of data that's available to consumers to use in evaluating them and to carry on their financial lives, this could create a market for new analytical tools and services that can benefit people, particularly the poor. It also should encourage competition. Up until now, once your data is at a bank, it's very hard to get it out. It's very hard to transfer your data to another bank or financial institution if you want to try to open up a new account and try new products and services. But with open finance, financial institutions and others would be required at your direction to share your data. And so that presents great opportunities for competition in the financial space, both in the formal and informal sectors. And again, use of non-traditional data. Traditional data has sometimes usage, such as in credit bureaus, has sometimes led to exclusion because a lot of people don't have traditional data that can be used in getting to the system. With non-traditional data now much more easily available through open finance, consumers have a chance to use that data which would have kept them out in the past and then bring them in now in this new system. There are some disadvantages and risks here. One that Ariadne was touching on is the digital divide. If we focus on a system that benefits people with smartphones and access to computer technology, I think we have to be cognizant of the fact that there'll be people left behind. And if we have a system that makes those folks even more behind because they're not participating in open finance, I think that's a great concern. So the question is, how can we bring people who may not have access to the latest technology into a system that is technology-based, but maybe there are tools or assistants or others that can help people participate in this to make sure that they take advantage. There are also literacy and numeracy challenges to make sure that people who are giving consent to flow of their data understand the terms of that flow and the numbers involved and that are being transmitted. There have to be disclosures that about what's happening with your data. Ariadne mentioned that before. Potentially in some countries in multiple languages and not just in one language, because and if it's not in multiple languages, there's a real risk people won't understand what they're even agreeing to. And then lastly, again, if there's risk involved here for how the data flows, this is an area where people are going to pull back and not participate. And so for this vision of open banking to open finance to open data to be successful, we have to make sure that consumers trust and have confidence in the system. Next slide, please. Here's some steps on how to make open finance more usable for EMDE consumers. Again, as has been mentioned, notice of information practices should be at the appropriate level of data and language fluency, avoiding highly legalistic language and unduly lengthy disclosures that people won't read, and even if they read them, wouldn't understand. Again, making sure that disclosures are written in a language that people understand, and also doesn't present huge technology challenges. In terms of consumer rights on data protection, it should be easy to provide consent and not unduly burdensome, but maybe equally easy to revoke consent as well if consumers no longer want their data to flow through the system. But we also want to not put undue burden on consent. Some of the other work we've done at CGAP has shown that people don't read notices oftentimes or understand them, and also are not really in a position to police their data. And it's particularly true in open finance. We are now involving many, many third parties that consumers aren't familiar with. And so having legal limits on use of data, say to legitimate purposes for which the data was provided, shifts the burden from the consumer to the provider. I think it's to be a more fair and balanced use of data. One option is also have consent expire. That's not something that typically happens, but may here with so much data flowing, is if you authorize your data to flow for a week or two, or a month, or even a few months, but after that time, you have to go back to the consumer to re-up their consent if they really want to have their data flow. It's important to have access to the data that's flowing, and I think that can't mention how important that is, because this is data that's now going to be used to make decisions about consumers. And if that data contains inaccuracies, it's going to be critical for the consumer to get access to the data. Not only the data has to go to a bank or a fintech, but to the consumer so that they can see if there are errors. And next, there needs to be a correction mechanism to make sure that if there are errors that are causing disadvantage to the consumer, that there's a chance to dispute and have corrected data. Likewise, deletion of data and rights to object to certain uses of data are all going to be important in ways to empower the consumer and make consumers invested in open finance as something that really helps them. And again, hopefully at little or no cost to the end user of the consumer of the system. In terms of dispute resolution, there are opportunities to be creative in how disputes are handled. There could be consumer associations that would help mediate or arbitrate disputes, expand the access to social media or apps for consumers to complain who may not have time and effort to write a letter or visit an office, is to make their complaints on Facebook and Twitter. And that sometimes is a good way to get people's attention. And it's a good way for the provider to keep track of complaints that they've received. But to be creative in how to resolve disputes in ways that are really not burdensome either for the consumer or the provider if possible, but allow effective and prompt resolution. And if necessary, to permit class actions so that companies' practices can be addressed and their legality in a more efficient way. And then lastly, data minimization, which is the concept that you only collect as much data as you need and only use it for those purposes that you collected it and then dispose of it, is an important way to help reduce the amount of data being held that could cause problems. And so basically, the less data collected, the less problem could arise. And so that's an important, this should be written into any open finance legislation. And back to Ariadne.
I don't know, but I actually do not have the right slide.
Oh, sorry. Okay.
So just what should be saying considerations for regulators? I don't know. Yes, this one. Perfect. Thank you very much.
Okay.
So I think maybe the slides were not totally in order. It's fine.
Okay.
So thank you. So David just went through the sort of the consumer perspective. I'm going to look at sort of considerations for regulators in emerging markets. Now, going back to what are the benefits of open finance and open banking, I think the three main ones that we can highlight is it can catalyze competition in financial services. It can support further inclusion, and I sort of talked about how that could be done. And it basically is a further push towards innovation. But there are disadvantages, and so regulators need to consider this when they're going to enter the space. It's not simply all benefit and no issues. There's a big burden that's on regulators, both from the framework of open finance, but also then how to make sure that the data protection provisions are properly in place. So, and there are many reasons for this. Regulators may not have the experience regulating either technologies that are part of the open finance framework. So this is the APIs and other related technologies, but they also, financial service regulators often don't have experience with data protection regulations, right? And I think part of the reasons why we come up with this webinar and in that paper is to expose that a little bit more. But that makes it more difficult. You're going to have to come up to speed. Then, there is a possibility, because you have all these resource burden, that you may not want to prioritize open finance. At least in particular in regards to, let's say, other types of initiatives, right? Or either if you want to go for open banking and not open finance, which is a bigger version, or you could have, it depends why you're doing it, but there are other types of regulatory levers that you could use to support competition innovation, and there are other levers that you can do to support financial inclusion. Open banking isn't necessarily not one of them. Generally, when I'm talking burden, it means it's because regulators are resource constrained. That could be constrained from a fund perspective, but it could also be just constrained from staff perspective. And so that needs to be taken in consideration. I've recently come back from a trip to Brazil, and it turns out that for an open finance regime, they have about 40 people that are doing the regulation. And working on the implementation and supervision of that. So that's a lot of people. So we have to think about that. It's quite resource intensive. Also, it may not be clear what are the regulatory jurisdictions. So that can be confusing from a mandate from an open finance perspective, but also how does that relate to data protection? Is it the data protection authority, the one that's responsible for all the data rules, or does some of it come under the financial service regulator? And that can happen, especially if certain data protections are integrated into financial services regulation, right? So we could have concurrent jurisdiction on data issues. And so that has to be clarified before you can implement any sort of open finance framework. And also, and I think one of the reasons why we're doing this webinar and the paper is that there may be certain legal frameworks missing, such as very important data protection provisions. So again, that's going to require work on the side of the regulator. Next slide, please.
And so the question is, I think we both think that it's important to have data protection regulation. And the question is, how do you introduce it in a particular country? And I think there's some pros and cons, and each country really needs to think about it, what works best in its current legal and financial environment. But what is the right time to introduce comprehensive data protection if a country doesn't already have it? One is the risk of premature application, which is if we create an overly burdensome legal structure, is there a risk that new products and services won't be offered because of the compliance costs? Is there also a risk that only the larger financial institutions in the jurisdiction will be able to comply, making it tough to compete with them? Maybe equally great concern is, will the larger players be disincentivized to help and serve the lower end of the market financially because of compliance costs, and it makes it unaffordable to serve lower income consumers, which would be an unfortunate consequence of open finance, which is designed to really open up markets, particularly people in the informal sector. And so how do we address that? I think each country again is going to have to think about that, but one is because we're in a largely digital environment, are the compliance costs going to be all that great? If the system is digital, the marginal cost for each particular account ought to be very low. It's all on a computer. It's all it's not requiring human intervention. And if there are strong concerns about sensitive data, again, it's not being passed through a lot of hands. It's going from computer to computer. And so I think the challenge is, how can data protection be adopted? Does it make sense to do a GDPR type law or similar overnight? Does it make sense to phase it in over time to look at some of the key protections that we've identified here in terms of notice, consent, and things of that sort, and introduce others over time? Again, it's a country by country decision, but integral to open finance, and really the purpose of our paper in this webinar is to indicate that data protection is an important tool to make open finance work for this consumer and the market. Next slide.
And so looking on, I already just discussed the big burden on regulators. How do we deal with this? So 3 points on this. I first already discussed the complexity about the overlapping jurisdictional mandates. So it's really important that these overlaps are identified, and that basically the regulators involved communicate and sort of formalize how they're going to cooperate, especially if it's concurrent jurisdiction, right? That is going to make it much easier for the whole framework to be put in place and to ensure, for example, supervision and enforcement. Then the second point is about, the burden on the resources. As we said, regulators are limited. And so how can we lighten that burden? So one of the things that that could be very useful is leveraging technology such as RegTech and SupTech to be able to do this. And lastly, you may also think about doing a phased approach to open finance, because that may actually make it may stretch out the resources over time. So rather than introducing an open finance framework in complete glory from day one, you could phase both the open finance, and you could also phase the data protections over time. So these are two different ways of phasing but you have to take into account, obviously, the legal and the technology environment before you decide to do any sort of phasing of that type. And next slide. And we also have a bunch of other further recommendations in the paper for regulators. I can't go into all of them, but maybe just to give you a little high level of some things that are in the paper. We suggest assessing how to best protect consumers' data in light of the country's existing legal structure, and then also think about how willing that jurisdiction is to adopt new laws. Can they harmonize the data protections? Are they able to harmonize the data protections and the open finance legal obligations? Regulators may want to consider enhancing consumer protection, consumer education, especially in the beginning of the launch of open finance. They could try to use more guidance, such as graphics, to show to consumers how their data is moving through the system and what does consent mean. They could consider requiring real-time notice of data transfers as a check to make sure that data transmissions are actually authorized by an individual. They can consider mandating meaningful consent for data transfer. So they consider other alternatives to consent, such as legal mandates, court orders, or contract performances. And they can also consider mandating implementation provisions, such as record keeping, response times for data requests, limits on the costs that can be imposed on consumers, security requirements, and so forth. I think we have come to the end of, yes, so to the end of the presentation. Thank you.
Looks like we have someone's hand up.
Yeah.
Oh, Rafe.
Rafe, would you like to?
Daniel, can you unmute Rafe?
I think, okay, is that working?
Yes.
Yes.
Okay. It's a great presentation. It's a wonderful paper too. I hope everyone does read it. Quick question on the point about, maybe starting with a non-comprehensive, not starting with a comprehensive data protection and an open finance regime, right? That seems like a challenging trade-off. And I'm wondering, what principles in particular, the kind of the typical data protection principles, do you think it might be possible to kind of leave out in an early stage? Because I know that's not an easy decision. I'd be really curious to hear which ones you think it might be okay or which may not be.
I mean, I'll start, maybe then David can jump in. I think some of the parts about the sort of more sophisticated data rights for consumers, right? In data protection, so where they have the right to maybe like access their file and modify it. And I think maybe deletion is important. I think revoke of consent in all cases is, I think, going to be instrumental, but I think there are a whole bunch of sort of data rights that consumers are empowered that may not be directly related to open finance, and I think those could be less prioritized.
Yeah, Rafe, that's a good question. I mean, something we wrestle with, because when we suggested phasing in, people asked us the same question, which is, which would you give up in the early stages? And we like them, almost all of them. The things like the right to be forgotten, which may be something that could be a downstream or not at all thing, depending on a country. But I do think the core points of notice, which is create a record of what your information practices are, consent, have some agreement. And even if we don't think consent works in general, this is an area where, as the screenshot we showed earlier, you have to specify what information is being shared. And so that essentially is a form of consent, that people will understand what they're doing, which accounts, which data, which time period. And I think, as I said before, access and correction are important. Data security. So it's maybe our wish list gets to be very long, but we did want to at least not be so directive as a country. It would be inappropriate for a country to say, these are things we think we can do now in light of our current technological and legal environment, and some things may need to wait for later.
Thanks.
Some more hands up. Maria, do you want to call on people? Should we, I guess?
Yeah, I think we can go in order. I think Ida was first. If Daniel, you can unmute.
Yes, thank you. Excellent presentations. On the topic of harmonization and jurisdiction, when in the Philippines setting, there are different jurisdictions depending on the general data governance, financial regulation, open banking, and so on. And there seems to be blurred regulatory contours which overlap. So you have one regulator handling part of the consumer protection, another regulator on data privacy, another regulator on competition, and a couple more on electronic documents and electronic commerce and so on. You mentioned about harmonization, so part of it, how to best tackle that, and then followed up by a next question. If we need to have a dispute resolution authority, who should be, or who, who among, or should it be all of this that I mentioned should be part of the committee handling dispute resolution because it belongs to different jurisdictions?
Yeah, I think there are a number of approaches. I can jump in and then Ariadne can give her thoughts, but I think harmonization is important just as a matter of fairness and level playing field in the economy. Who the person is or entity is that does that harmonization, I think is a question. Certainly there are a number of data protection authorities that take on that role and may have regulatory authority, may even have dispute resolution authority. I think so that's one option. Another is to delegate to the central bank or other financial non-central bank financial regulator the ability to implement this law, or sort of a hybrid, which is the data protection authority has to consult with the financial regulator because as said earlier, there's some very critical financial terms here, but they're also critical data protection terms. We want to make sure that they integrate properly. So I think the regulation could come from a comprehensive entity that looks at the whole economy, or a data protection authority or financial one. And likewise, the dispute resolution could also be done by that entity. I think just take into account that if there's ways of using technology to resolve dispute resolution in the first instance, it's probably best to do that. Maybe that the consumer complains to the company and then a copy goes to the regulator, and only if the regulator sees problems does the regulator step in. Otherwise, it can be informal dispute resolution.
Yeah, so I agree with David's approach. I do think also there should be more communication between the agencies and authorities generally. I mean, it doesn't necessarily have to be a formal body, but I do know, for example, like in Brazil, where they're grappling with open finance and the implementation, they do have informal sort of communications between the authorities to align them. And there is no reason why the data protection authority cannot be part of generally something that's mostly focused on financial services, but to at least have their input. In Brazil, for example, the data protection authority has just been created and the open finance had actually been launched before its creation, even though the national data protection law already existed. So that complicated it. It wasn't able, they couldn't sort of integrate the data protection authority from the start. But I see that it just having open communication, whether it's formal or through an MOU or informal, is probably one way of trying to solve sort of the question of who to delegate. I think there needs to be a consensus among the institutions of which really is the one best place to implement and to supervise.
Siobhan, you want to go
next question?
Hi, this is Siobhan. Let me see if I can turn off I'm on my phone, so apologies. So thank you so much. This is really interesting, and I'm coming from a sort of data governance perspective, as well as sort of a software technology implementation perspective. So just a comment I have in terms of some of the how to approach legislation in places where it doesn't already exist. I mean, I will say that pretty much anyone who's working in banking systems, financial systems, will already hopefully have built into their software following the standards around ISO or NIST in terms of data security. GDPR is kind of the gold standard in terms of what permissions you need to have in your systems, as well as PCI. PCI is oftentimes kind of the way that software developers implement GDPR type restrictions with additional things. So I think there may be, in a lot of these countries, an opportunity where you maybe don't have comprehensive legislation yet to at least do an analysis of what are the current best practices that are already being implemented by a lot of your banks and financial institutions. And you may find that some of the things that you want to see are already being done because like PCI requires it. And understanding that sometimes the areas that are more difficult are around the reuse of data for, say, marketing purposes, right? So in general, everyone wants to protect their consumers' information from hackers, but maybe they want to be able to market types of things to those same consumers or use those for financial information that they haven't given full consent to. So, again, I think narrowing down the gap between we don't have a legislation and therefore nothing's being done, that's not true. There are things being done. And so I think mapping those existing practices to existing legislation might be one way to start. The second thing also is to say that, we're talking about how you have different regulatory bodies and different types of actors involved in the legislation around open finance and data protection, I think there's a real role here for civil society, private sector, plus regulatory bodies to get together in a non-obligatory but informal way to have conversations about what's happening in a specific country, to say, to promote open finance, this is what the private sector, app makers and banks are looking at versus what civil society advocates are looking at versus what regulatory bodies are looking at. And then that can help, again, inform the legislative approaches towards implementing this in a context-driven area. And so these are just a couple of things that we've seen that could work in the past. So hope that helps. And if it doesn't work, please tell me, and please let me know if there's other things you've seen work.
I think those are all great suggestions. I mean, I think having just on the latter, we've talked a lot about civil society and having people who are representative, not of the industry, but of consumers, have a seat at the table and be part of a legislative process, but also an informal dispute resolution process as well, potentially.
So we're over time already, but maybe we take one last question from Rashid and then we can finish.
Can you hear me?
Yes.
Yeah. Thank you, Maria. I'll keep my question short. Thank you for the excellent presentation. My name is Rachit Kaitan from the IFC. And my question, I think, echoes a question that was in the chat as well. Just if you could share some examples on emerging market countries that are sort of good examples of success or even early stages of success, right, in implementing sort of an open data banking finance framework, and sort of what makes them good examples. Thank you.
So I'll answer that. So I'm just taking a response, not necessarily from a data protection perspective, but just a general open finance ecosystem perspective. I think one of the leaders right now is Brazil. And what's really interesting in the way Brazil has taken it forward is basically they've had a very consensus-driven approach with industry. So even though they ultimately had to mandate that the biggest banks join the open banking framework, they basically had industry join them to develop most of the standards. So whether that was, the API standards, whether that was what were the costs that were going to be implicated, and what would it cost to make the data calls through the system, which types of data would be included, and how it would be staged. All of that has been determined in basically working groups that were led by the central bank, but not controlled by the central bank. So the industry had a really strong participation. There was ultimately, if there was not going to be a decision taken, the central bank could veto it, but I don't think they really used it. I think it was just a threat that got everyone around the table to get everyone to agree. And it's been really actually impressive, the performance. If you look at the number of API calls and the number of transactions, it's actually has surpassed the UK by millions. And it's just started recently, and the UK has been around for much longer than Brazil. So I would have a look at that. I don't think we really have enough time to go further. But maybe David, you have something that you want to add?
No, I think that addresses it well.
I think that's it then. We're over time, so I think we can end here. Thank you, Ariadne, David, and thank you everyone that joined.
Okay, thanks very much.
Thanks, everyone.